Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with this good friend and somebody who's helping him get better at stock trading, Mr. Dan Bird. How you doing, sir?
Good morning. I'm doing well. Happy Father's Day.
Thank you. Happy Father's Day to you as well. Actually, I should say stock investing because right now I'm sitting on the sidelines waiting.
Right.
But one of the things I knew I wanted to talk to you about today, because again, you have the ability to pull up charts and metrics, is I believe, complete conspiracy theory, that someone somehow whispered something to the Wall Street Journal, who then whispered something to Steve Leisman of CNBC, that whispered something to Wall Street, that they got a heads up that the 50 basis point move that they were counting on through Monday afternoon was not coming, and that the Fed was going to deliver 75. I believe this because Powell has been very clear. He wants to communicate to the market so the market can move first. I think he knew he had to do something after an 8.6 reading on CPI. So I think the chart somewhere is going to show that there was a quick and sudden move, maybe Monday afternoon. But I wanted to ask you about this because I figured you would be able to pull the chart up and say, no, I don't think so. Or, wow, look at something changed. So what do you got?
Well, the chart definitely shows something changing. But I think the 75, Wall Street baked that in after the 8.6 inflation number.
So the week before. Okay.
Yeah.
All right.
Yeah. I think most of Wall Street was expecting 7.5.
Okay.
Frankly.
Oh, so Wall Street was expecting 7.5 CPI. We got 8.6. Thus, they had to change, or what do you mean 7.5?
No, they got 8.6. Remember, last month I talked about the fact that the CPI numbers would have come out before the Fed.
Correct. Yeah.
Now, interesting that was, because last month it was the opposite.
Correct.
The Fed had their meeting and then CPI came out.
Right.
And CPI came out a little lower.
Right.
Last month.
Correct.
Right.
Mm-hmm.
Well, and I talked about it last month. I said next month it's the opposite.
Right. Yep.
So the Fed is going to have the data before their meeting, and they can make a decision. They can make a decision anytime. They could have come out Sunday night at midnight.
They could have.
We're going 75.
They could have Paul Volckered it. Absolutely.
Yeah, they didn't have to wait till the 2 o'clock on Wednesday afternoon.
Yeah, no, I agree. They won't, because that's not Powell's.
Yeah, that Powell wants to have open communication.
Communicate, set the market up.
Technically, they could have done that.
Oh,
they don't have to wait.
Yeah, that is very true.
So at any rate, this month was different from last month because the CPI came out first and then the Fed meeting. So the Fed had the data that they could then make a decision. Now, if CPI had come in at 8.0 or 7.9, what do you think they would have done?
50.
Yes, exactly. They would have done 50, and they would have said, see, it's working.
It's working. Here's another one.
Our plan is working.
Yes.
But because CPI was before the Fed meeting, they had the data, and they said, clearly, we have to be more aggressive.
Right. Okay.
So I don't think it was really a big surprise. And I'm not so sure there was any conspiracy around it, although the chart certainly does look conspicuous.
All right. Well, let's see. Let's see this chart one speak of.
Let me share. All right. You see it there?
I do. Yes.
So this is the S&P for 1 week. This is a 5-minute chart. So this is Monday, Tuesday, Wednesday, Thursday, Friday.
All right. So.
Okay. So Wednesday at 2 is right here.
Where are you?
Okay. Wednesday at 2 is right here.
Okay.
All right. So you see that big spike and then the spike down.
Yep.
And I can't turn this into a pointer, unfortunately. It has to be a
plus sign. But I see it.
But you see this big spike right here, went way up.
Yep.
And then it came that was right when they announced 7.5.
Yep.
And then it came down, dropped way down here. When the market makers said, oh my God, 7.5, I think the street has been waiting for this. The market's going to probably take off. So the market makers said, we need to reload our inventory somehow. We need to stock up our warehouse. So let's go take out all the stops.
Got it.
So market makers dropped the price, took out all the stops down here so that now they could reload and accommodate all the people that wanted to buy as it moved up.
And that was when Powell was talking, or after he spoke.
This is when he was talking, right, in the afternoon.
Yep.
And then at the end of the day, it started to come down a little bit, but it didn't come down it still ended up as a positive.
It was an up day. Yeah.
Yeah.
And then
But
look at what happened.
then overnight, everybody was thinking about it a little more, and they're saying, "Oh my God, 7.5 because inflation is spiking.
Yeah.
Maybe we shouldn't be buying. Maybe we should be selling."
Yeah.
So then there's a huge drop in the morning. It continued to sell off the rest of the day.
Yeah.
All the way till 3 o'clock. From 3 o'clock until the next morning, Thursday morning, it went up.
Mhm.
Then it went down, sort of went sideways.
Yeah.
Right
But
here.
what happened like Monday at like 1 or 2 o'clock? Because that's when Steve Leisman, or maybe it was earlier. Oh, it was. Yeah.
So Monday at 1, or Monday at about 12:30 is right here.
Okay.
So if you want to go with your conspiracy theory,
Oh yeah, I am. It's
let
always
everyone do ahead of time. It's going to be 75, and they release it to Wall Street Journal or whatever.
Yeah, let's be clear. It wasn't everybody. It was the people in the know. It wasn't Joe Blow investor.
People in the know.
Yeah, look at that. That's pretty.
Let's say they knew right here at 12:30. It's going to be 7.5. So it started selling off. Sold off all day Tuesday.
Mm-hmm.
But Tuesday afternoon at 3 o'clock, it spiked way up. And even Wednesday morning.
So how many points are we talking about? Where are we at the bottom of that? We're at like 3,700.
This is 36. Let me see. Hold on. So the bottom of this is 37.23.
And then where do we go?
Then we went up here to 37.34. So it's only
2%.
I mean, no, 37.36. So 10 points, not much.
Oh, okay. All right.
And then we peaked out here at 37.63. So 40 points. That's quite a bit for the S&P.
Yeah, 40 points. Well,
40 points to the peak up here.
That's 1%.
Which was on Wednesday. This is when Powell was talking.
Yeah.
Right.
Okay.
And then we went from 37, 30, 35.
Yeah.
All the way down to the bottom down here at 36. 36.40. 36.40 basically was where it hit. The bottom was 36.36, but right around 36.40 is where it bounced twice.
Yeah. So that's 3%. So, okay. So I was just curious what it looked like in charts. I knew you could bring it up. So I don't know. What's that? A drop of like 1.5%. So maybe there's nothing there.
I frankly don't think it was a big surprise after the CPI number.
Okay.
And while we're on that topic, let's talk about the CPI for a second.
Sure.
Because I put this in my news. Well, let me bring my newsletter up.
Yeah. That's a good idea.
Because I talked about this in the newsletter. So this is, if anybody wants it, it's free. Just send me an email and I'll add you to the list. And if you get tired of getting it, or you don't like the cartoons anymore, just let me know and I'll take you off. But send a note to breakpointtrading@gmail.com.
Mm-hmm.
Ask me to add you. I'll add you to the list. I'll send you this past week's email. Mm-hmm. So you'll be all caught up. I've noticed there's a few people that end up sending me a note more than once.
Oh,
so for some reason they're not getting it. What I've noticed when I send this out, it actually goes from my personal email, which is danbird@comcast.net.
Oh, okay.
Does not go from breakpointtrading@gmail.com.
Oh,
this is where I receive your emails in order to add you to the list, but I don't want to clutter my personal email with all, I probably get 40 or 50 from your YouTube alone every week.
Awesome. That's great.
And I don't want to clutter my personal email. So Breakpoint Trading is a way for me to keep it clean and I can keep it separated and I know who sent one and who didn't. But the ones that I noticed are sending me requests again. I send them a note back saying, go look in your spam folder and look for danbird@comcast.net. Because that's how I send the email out. And every single case, they send me a note back saying, oh, yeah, you're right. I found it.
Okay, cool. All right. Yeah.
So if anybody sends me a note asking to be added and they don't see it in a couple of days, go look at your spam folder. That's where it probably is. Yeah.
Gotcha.
One thing I want to point out in this, so here's a couple of the cartoons that I put in this week. I often do what the S&P sectors are doing each week. So this is a 1 week view of all the sectors. So this one here is last week's. And you notice energy is at the very top. This is this week's, and energy is at the very bottom.
Yeah, it rolled over last week. Yeah.
big time, 17%.
It's even worse than I
17%
thought.
drop in energy in 1 week.
Damn.
So it went from the number one outperformer to the number one underperformer.
In a week. That's
In 1 week.
abnormal. Yeah.
Well, depends.
Okay.
So let's go back and talk about CPI.
Okay.
So here is, and I talked about this in the newsletter, there's 2 ways to look at CPI. There's headline CPI, includes everything. And that's the number that they publish every month and the one that the press focuses on and everything else. And this is the one that Powell used to go to 7.5. This is the one that went from 8.3 to 8.6.
Correct.
Okay. Down here at the bottom, this is the rate of change. This is really the important part of it down here. It's not so much the 8.6 or 8.3, because the way CPI works is as they add a month, they drop a month off. So to the right of this pink line is 12 months, and that's what they look at, that 12-month period.
Yeah.
So what they're looking at is not so much the actual number, but what is the rate of change that it's moving up by.
Yeah.
And if you look down here, we just dropped this month off back here, which had a big rate of change.
Yep.
But the next 3 months have a very low rate of change. It's actually almost flat.
Okay.
So if we add another big one, or we even just add one that's 8.6 or 8.5 up here, we're dropping off low rate of change numbers.
Sure.
So we still might not see a big change downward here yet. Okay. Follow that?
I do.
So the rate of change is the thing to watch. Now, when we went from 8.5 to 8.3, the rate of change went down. And that's what I said last month. We had the Fed meeting before the CPI meeting. The Fed raised by 50. CPI went down. The rate of change looked like this.
Yep.
If you forget about this right-hand part, looked like that. If it had continued going down, they would have done another 50, and they would have said, see, it's working.
It's working. Yep.
We've got 2 data points now of declining CPI, declining inflation, but it didn't.
Right.
The rate of change went up instead. So they went to 7.5. I don't think it was a big surprise they went to 7.5, frankly.
Okay.
Now, there's another way to look at CPI, and that's core CPI, right? So core CPI strips out energy and food. And a lot of people are like, well, why the heck do they strip that out? Because everybody needs that. Everybody needs gas. Got to get to work.
Yeah.
Got to get to the grocery store. Everyone has to buy food.
Yep.
So why the heck do you strip out energy and food to get to core CPI?
Yep.
Well, the reason is because those 2 items are very volatile.
Yes. They
move up and down. I just showed you the energy chart.
Yeah.
Went from number 1 in 1 week to last place in the 2nd week. That's a great example of how energy is very volatile. If they went by that all the time, they'd be adjusting the Fed rate constantly.
Right.
So they stripped that out because it's so volatile to try to get something that looks at inflation without those volatile numbers included in it.
Okay.
And that's what they call core CPI. So let's look at core CPI and see what the rate of change looks like on that.
Okay.
Oh, look at that. It's going down. So when you take out energy, especially energy, which gas has been, going sky high, as we all know. Well, now the core CPI is actually starting to decline. And the Fed looks at everything. They don't look at just CPI or just core CPI. There's lots of different levers that they pull. But if you strip out energy, that's what it looks like. Now, the other thing that I put in the newsletter is the Baker Hughes rig count. All right, so these are the oil rigs that are being brought back online each month. And what you'll notice here is that because of COVID, we had this huge drop.
Yeah.
Because demand went to zero practically.
Yeah.
Right?
Yeah, we shut the country down.
Shut the country down, told people to stay at home, don't go out, don't go anywhere. Nobody was buying gas. So energy, oil rigs are easy to shut down, but really hard to bring back online.
Yeah.
All right, so all the oil rigs shut down right here. Here's the peak of COVID right there. We're not even back to the peak yet. Right there. We're not even back. Almost 700 is the peak. We're not even at 600 yet.
Wow.
So we had this huge drop in oil rig capacity, and we're slowly bringing that back. Now, anyone that knows economics 101, what does this tell you is going to happen with the price of gas and oil?
Well, it means the supply is coming back on slower. Unfortunately, it's coming on slower in the summer driving season.
Yes, not only is supply coming on slower. I wish I could overlay this with a demand chart.
Exactly.
Right here, demand dropped to zero practically, but demand didn't come back at the same rate as the rig count is going up. Demand went more like this.
Correct.
Straight up.
That's the problem. Yes.
Right. That's the problem. So demand went straight up, but the rig count, they can't bring these rigs back online that fast.
Yeah, I got you.
So every month they're adding more and more rigs. So more and more oil is getting into the system every month. That's one of the reasons that the oil price dropped. And I think it's going to continue to drop. Now we might get spikes here and there, but I think oil is going to continue to drop. And just like you saw over here, where energy went from number one to last place, energy will probably continue to decline.
Yeah. So oil dropped 6% last week.
Right. Oil dropped 6%. It may spike, but I think it's going to, in general, the trend is going to continue to be down. And what that means for core CPI, remember core CPI right here, this strips out energy. So this is the inflation rate without energy. This will probably continue to go down.
Well, it's energy and food. Let's
and food. Yeah. Food's in there too. Yeah.
So
part of the reason
that's actually something I think we need to start talking about. Yes, I do think oil maybe has seen the peak. Well, fingers crossed for everyone. But I think food is just about to start going up. And I don't know what the percentage is. I think oil is, or energy is like 30% or something. I don't know what, I think food might only be 12 or 15% of headline. But I think food's going up from here.
I think that's probably true for a number of reasons. One is Ukraine.
Of course.
Ukraine is the number 4 producer of meat in the world.
Yeah, and your substitution factor is not great. Yeah,
right.
You need those calories.
The other factor though goes back to the price of gas and the price of oil.
Of course, yeah, it's in everything.
The cost of delivering food has gone up, so the price of food is going to go up. So the price of food, I think, will continue to go up. I think it will probably lag behind oil, but it will level off. As oil goes down, the price of food will level off.
Okay.
All right. So these are the two things to watch. So CPI, the headline number that everyone will report on. We've got 3 months of fairly tame rate of change in here. Yeah. And if we have even an equal rate of change up here, it's still going to show this either going up or sideways, not coming down.
Yeah, I've already made my call for next month. I'm calling 8.8, so up.
Okay. Could be.
Yeah.
But what would you call in October? It gets reported in November.
Oh,
look at that big jump right there.
I can't look that far ahead. My crystal ball is broken tomorrow, let alone October. No idea. I'm gonna hope we're in the 7s, if not the 6s, in October.
I use a crazy 8 ball, so.
Yeah, exactly. It's a wild ass guess. Let me roll the dice. Let's see.
Yeah. So anyway, if with this big rate of change here, if we get even a flat or slightly lower rate of change up here,
it'll be noticeable. Yeah.
It's going to be a noticeable rate of change down here.
Yeah, of course. Yeah.
So keep this in mind when you see those inflation numbers there on a 12-month period.
Very cool.
So we'll see.
Yep. Anything you want to show your newsletter one more time in case somebody wanted to get a copy?
Sure.
And I thought your explanation in the newsletter was great. I obviously know about base rates and all of that. I thought core and headline was a great discussion in your newsletter. So again, folks, if you're listening on the podcast, it is breakpointtrading@gmail.com. Thank you very much, Mr. Dan Berg.
Yeah, we'll talk. There were some very bold calls made in the newsletter this week from a guy that I watch and respect a lot.
Episode number 2 is coming to you.
And we'll talk about that. Yeah, next time.
Thank you.